All right, back to work, back to work. The party continues. We got one more day left this week. Let's finish up what's been a fantastic week so far. And boy, a lot has changed in the last 24 hours. In fact, there was one thing that happened today that really changes almost the entire dynamic of these markets. And for the most part, that one thing today, it tells me that bear traps are probably where the money is made on Friday morning. In fact, I have 3 specific types of bear traps on my radar for tomorrow. I want to make sure everyone has a game plan, a roadmap to make some money to finish up the week tomorrow morning as well. So it's been a fantastic week. Charts are all ready to go. Let's go dive right in, find some more winning trades, and finish up the week with some more green. S&P and SPYs already, as you can see. Nasdaq and triple Qs are all ready. I have 2 very simple but very important clues right now on the charts in front of us. They're tipping us off to where the winning trades are waiting for tomorrow. One of those clues is right here on these hourly charts. I mentioned earlier, one thing happened today that completely changes the dynamic of the markets right now, and that is that new trading range you see here on the 60. Now, remember 24 hours ago, we had that big bear channel coming down, those measured retracements coming down. So we weren't quite sure that the buyers could hold this. We weren't ready to count the sellers out. Well, that range up here now, it anchors this market going higher. More importantly though, now we have 2 ranges. We have a range down bottom from earlier on in the week and a range above us. Range down bottom earlier in the week and a range above us. Now, why is it important? Well, because the new trading range acts like a magnet. It anchors the market higher. It gives the buyers a lot more control than they had 24 hours ago. More importantly though, now that prior trading range now starts acting as a breakout pullback. If you watch these videos a lot, you know that whenever we have 2 trading ranges like this, the most recent range is a magnet. The previous trading range is now acting as key support for a breakout pullback. So this really, again, it changes the dynamic completely here going to tomorrow. It's one really, really big clue here on the 60. Now, I have one more important clue though on the tick charts, the faster time frames. We're going to drill down to those and talk entries in a moment. Before we do that though, let's check schedule for tomorrow. There's 2 things you want to be aware of for tomorrow. First things first, industrial production news at 9:15 Eastern time. That is, none of these news reports are that big for tomorrow, but that's the one that has the most potential to be a catalyst tomorrow morning. Most importantly though, tomorrow's a Friday. In my trade room, I have something called the Friday mindset. See, Fridays love to run into the close. About every couple of Fridays, we get these nice strong runners in the afternoon. So my mindset, my goal on a Friday morning is to get in as early as I can, get into trades when trading's good, but leave a runner into the close because Fridays love to run. So watch that industrial production number at 9:15 Eastern time. But again, most important thing, if we can get into something tomorrow morning, leave a little piece to be a runner because go back and see for yourself. Fridays love to run. But let's get back to our charts though, because we have a lot to cover in the rest of this video. I mentioned earlier that this new trading range up here anchors this market going higher, and when combined with that previous range, it sets things up for a nice bullish reversal higher here. And again, I think bear traps are probably going to be, because of that, where the money is made for tomorrow. Let's now drill down to some tick charts, because we don't trade off of time charts or a 60-minute time frame. We trade off tick charts because tick charts are based on volume and they make pattern recognition a hell of a lot easier. By the way, all the time frames you'll need if you're watching for the first time tonight are in the upper left-hand corner, and that yellow line is the only indicator we need to find winning trades. That is the 21 EMA. There's one really big clue right now on this tick chart, and that is that bearish move down into that trading range. Now, why is that range important? Well, first of all, ranges act like magnets and they love to rotate back and forth using things like pendulum swings. For example, I measure the amount above, I measure the amount below. That's a key area of support below that trading range. And one more thing about ranges is that whenever we see a breakout leg of a trading range, we use that as a measuring leg And we can then, depending on how far this pulls back right now, we can use that as basically a measured move. And that creates another key area of support. So this area now, again, depending on where that measured move ends up being anchored to, is a pretty big deal. Lots of support down below. If I go a little bit lower here, you'll notice that breakout pullback zone. That's that level off the 60-minute time frame we mentioned there before. So put this all together, right? That 60-minute chart is anchored higher now, and I have a range right now that's trying to complete that pendulum into that measured move. This is why I said earlier, if I had to guess right now, I would guess bear traps are probably where the money is made for tomorrow. Now, I mentioned earlier, I have 3 types of bear traps I'm watching here for tomorrow. Let's cover those 3, and we'll cover some variations of those because tomorrow's OPEX Friday. I want to cover some curveball scenarios later on in the video. If you like making money, make sure you watch all the way to the end. My favorite type of bear trap. As we go lower, remember, I don't have a crystal ball. I don't know how far this move down is going to go. It may not go lower at all. I have a game plan if we go higher as well. But I'm not going to pick a bottom down here. What I do know for sure, though, is this is a horrible spot to be a seller. So one type of bear trap I look for is what I call a failure into trap combination. I'm not going to pick a bottom down here, but if I start seeing bears come in and foolishly chase after this, trying once, trying twice, see, now I know where their stops are. Now I know where their pain is. If you're caught short and you get stopped out of a short trade, what happens? You buy your way out. Now remember, ranges love to rotate the amount below, the amount above, leave that runner because tomorrow's a Friday. Now, if you want to make more money, add to your winners. So once this failure triggers and we start to see some separation off that 21 EMA, I'm going to add to that position, add to that winner, higher high in price, right below that low. Now this is technically a technical bear trap pattern. In our free video classes, in our trade room, we call this a failure to try into a trap combination. And again, remember, on these trap patterns over here, look for that separation away from that moving average. It's a really good clue. Nice strong green candle closing above that 21 EMA. That's your signal for the add-on. That's one of 3 trap patterns I'm watching for tomorrow. Now, keep in mind, we oftentimes see a run lower. We oftentimes will get a 2-try failure. We'll get that nice bounce right back up as stops get run, but then ranges love to break out pullback. So every once in a while, we hold the underbelly of that range and we see another leg going lower. Now, this area right here, that low, and again, breakout leg, measured leg, right? That creates a support zone down here. Now, think about this. Anybody who sells short up here, they're probably taking their profit where? At that low. Sellers up here become buyers down here. This, once again, is a horrible spot to be selling. So this, a double bottom retest, is oftentimes a gift to us buyers. Trap those bears in once, twice. Why twice? Because again, I want their stops. Guys, the easiest way to make consistent money is to run stops, juice those stops, because again, it produces these nice strong spikes going higher. And remember, string together that failure into that trap combination as we try to rotate back up to the high of that trading range. I call these double bottom retest or retest trade, we call them in our trade room. And again, it may not be double bottom, it may be a breakout leg, measuring leg, so keep that in mind for a variation on that. One more type of bear trap we'll talk about, then I want to talk about if we go higher, because you can see here, we might start rotating off of that low here overnight. We may not get that failure down here. Again, my kind of dream scenario is I want to run lower, trap some bears in, and squeeze those stops. But you know what? The word might get out that that new range we saw on the hourly chart, there might be so many buyers down here, it may just whoop and run right back up, and I may not get the entry. I can't blindly buy it. I wish I could. I wish there was some indicator I could use, but there simply isn't. Divergence won't do it. Reading tape won't do it. Order flow won't do it. Okay, so I can't pick the bottom on that. If it V bottoms off the low, the hardest part about this is staying patient for this pattern. If it V bottoms, it almost always begins to grind going higher. As the sellers get out of their positions here, it begins to float and separate off that moving average, right? It'll separate off that moving average. Okay, now that voice in your head is going to tell you to chase after this. Do not chase after it. Mark off that high, mark off that low, and repeat after me. First test is the best test. Now, ideally, this will go right below one of those prior swing lows. We can grab that first test for a bear trap. It could be a seller failure pattern, a pullback combination, a strength trade. Any of the entry patterns you guys are learning can be applied. First test is the best test in that V bottom reversal. Not my favorite bear trap. I'd like to be buying down here, but hey, I'll take whatever the market gives us. Now, I want to talk about if we run higher here right now, because that is a little bit more tricky. But first though, let's slow down for a few moments, because if you're watching for the first time right now, maybe you're like, what the heck is this guy talking about? What are bear traps, failures, V bottoms, double bottom retests? I get it. I do look at things a bit differently here on this YouTube channel, but don't you worry. I teach the entire system. In fact, I have a ton of examples of traps, failures, V bottoms. Guys, I cover so much more of this in our free video classes. I'll put a link up top here for you, upper right-hand corner. Grab that link that popped up there. Take that free trading course. The strategy I teach in that video series will teach you a stupidly simple trick we use in our members trade room that literally tells us exactly where to find the winning trades each day. It is so easy. You'll laugh how easy it is once you learn it. More importantly, I want to teach you my favorite entry setups so you can time better entries, make a lot more money. Guys, the markets are way too good right now not to be making consistent profits. So if you're tired of missing the best entries, if you've lost your confidence in your current trading strategy, hit that link that popped up there. Watch that free video course. Everyone loves the trade examples I include in that short video series. The best part is, guys, it's 110% free for you. And don't forget to, I'm going to put all the important links you'll need to learn more about this stuff in the description of the YouTube video. Definitely start first with the free video course. Most folks start making money on their own just by taking that free video class. So start there first, and then don't forget, every morning, the place to be is in our trade room, 8 o'clock Eastern time. I'll put trade room membership links down there for you. Come out and join us and trade along every morning. And boy, I post a ton of charts, videos, mindset stuff on Twitter or X. If you're on Twitter X, again, give me a follow. All the details you'll need to learn more and hopefully earn a lot more. I'll link in the description of the YouTube video. So that's where you want to go to learn more and see more examples of these trades I'm talking about tonight here on the video. Now, I want to talk about here if we don't go lower. Again, I want to go lower and then pop back up again. What if we don't? What if we start going higher here overnight? Well, remember, what's going to happen is this range, right? This range is going to want to rotate, right? Back and forth like that. So as it goes higher here, first of all, what's my problem? My problem is I haven't completed my full rotation. I haven't completed that pendulum swing. We're not down around key support below us. And we're certainly not all the way back around that breakout pullback zone down below. So if we start going higher, would you agree that I'll be buying a little bit higher than I want to be buying right now? Don't forget, right? We have a big move up right now on the 60. We should be trying to pull back a bit deeper here on the hourly chart. So if we start rolling higher here, I need to get in as low as I possibly can. Now, if you're in my free video classes right now, you know what I'm going to say next. What is the one pattern that gets me in low when I'm worried about buying too high up here? It's always a bear trap. It's always a technical bear trap. So if it starts rolling higher here, this is where you want to look for that separation. This is so important, that separation. Like, look back here, right? No separation right there. See that? No separation. When it pulls back, you want there to be some separation. Separation equals strength. Write that down. Separation equals strength. And I only use this on the 21 EMA. It's going to want to rotate going higher. It's going to want a pendulum swing going higher. Okay, the entry now is easy. Mark off that or higher in price. Below that low, strong green candle, convincingly strong green candle, closing back above that 21 EMA, and that is your continuation move going higher here. Now, here's a question. What if we run lower, right, and then really jam higher? What can I do as we get up top there? Can I sell it back down again? Buy it up there? Maybe. I got one pattern to look for there. And also, too, what if we go sideways here right now? I mean, it's been a pretty choppy week so far. What if we get stuck going sideways? Between you and me and YouTube, if we go sideways, that might open up what I call a slingshot reversal. Let's talk about those now over on the Nasdaq. The Nasdaq's getting a bit lonely over here now. Look at that bull range up there, 2 ranges. Okay, before we dive into the Nasdaq though, if you're enjoying this video right now, help me grow this channel, will you, by hitting that like button for me, subscribing, and sharing this with other trading buddies. YouTube rewards me every time you like, share, and subscribe. I know we're all busy people. I appreciate you spending a few minutes with me every evening here on these YouTube videos. So thank you so much. I apologize for begging for likes and subscribe. It's YouTube, right? It's YouTube. That's the way it works here. But thank you so much for all the ongoing support. Now, let's get back to business and go find some winning trades on the Nasdaq. The new range here is the anchor. The previous range is the breakout pullback. You know that already. Let's go take charts now. It's a bear range. Same idea here on the Nasdaq, right? As we go lower, you'll notice right now we are at that pendulum swing already on that Nasdaq. But I would love to get breakout leg, pop up, measuring leg down here. That's right around that breakout pullback zone. That would be a fantastic place down there to get our hands on one of those bear traps, right? That 2 try failure back up, that double bottom retest back up, all the same stuff, right? That V bottom move back up. Okay, I'm not going to go back and repeat myself over and over again on that one. Let's talk about, though, if we go higher here, all right? Because this could be pretty good as we go higher, and we'll talk about if we go sideways. Because going sideways is also something we should be ready for tomorrow. And that might throw a bit of curveball I want to be ready for here on Friday morning. If we go higher, I want to buy as low as I can. And again, the goal of this will be getting that separation off that moving average and getting in off that bear trap, right? Buying as low as I possibly can as it rotates higher. A lot of times what happens though is because these ranges rotate hard sometimes, if it V bottoms and begins to grind on us, we know how to trade that, right? We know how to go out and draw that trend off the high, mark off that low, and as always, repeat after me, first test is the best test. And again, my favorite entry is always below a prior swing like that. Oftentimes, there is no prior swing. It could be a failure pattern. This will make a lot more sense, of course, if you're with us in the free video classes right now. And again, remember, when it comes to ranges, it's all about rotation. The amount below, the amount above, right? That's going to give us now that target on the other side of that trading range. Now, what if this thing really, really rips? If it really, really rips and we get a convincing break through the pendulum swing. Okay, one of the biggest reasons why range rotation is so important is because if we know how much we're below the range and we pin that above the range, if we break through that pendulum swing, right? If we slingshot off of that low, now how do you trade that though? We don't want to chase after it up here. Remember, ranges, when they break out, what do? They love to, you got it, they love to break out pullback. So if we do get, and this is a bit more we think we get tomorrow, but who knows? I have no crystal ball. All I know is if this thing really rips going higher, and again, you'll know when it's a valid breakout because it'll convincingly go through the pendulum swing. If that happens again, what we'll look for is a 2-legged pullback back to that trading range. Whenever I think of a range breakout, I think of a breakout pullback. Whenever I think of a breakout pullback, I think about a measured move on that pullback, a 2 two-legged pullback. In fact, the best ones go a little bit more than a measured move, right? A little bit more. I always tell my students, think about a measured move that goes a bit too far. What that will do is it'll give me a key area of support. Now, you know me. All right? I'm not gonna pick tops and bottoms. I'm not gonna blindly, right, buy that because it may go a bit lower, right? What I'll do is I'm gonna wait for those bears to try once, try twice. We are, again, unless something dramatic changes overnight, we are not a bear market right now on the 60. So the odds of this rotating all the way back down again are not as good as they were 24 hours ago. Now we have all that momentum going higher. Whenever I see a very strong breakout going higher, it's very high odds we're going to retest that high. I'm going to go in and trap those bears in. Again, a variation of a bear trap. 1, 2, trap in those bears, squeeze those stops. And if we're lucky, before we get that retest of that high, then we start looking for, remember, separation off the moving average, higher high in price, and that final add-on right there. That is debatable. That add-on right there, we'll have to wait and see where that sets up because we want to make sure we can at least get a 1-to-1 before we take out that high. And remember, leave a runner because tomorrow is a Friday. So if it really cooks, and again, the key is that convincing break to the pendulum swing. It's all about that two-legged pullback. Trap those bears in, add on the retest back up to retest the high. One last thing I want to talk about right now is what if this thing goes sideways here? Now, if we start chopping around right now, going sideways, think about this. This bearish range is going to want to what? It's going to want to rotate. So as we go lower here, think about how amazing this could be for those buyers tomorrow because now that range is a magnet. That range is going to want to rotate back up again where, again, you're in that breakout pullback zone we mentioned earlier on the hourly. So as we go lower here, trap those bears in, 1 and 2, squeeze those stops, get that add-on trade going higher. This is why I always tell my students ranges will soon become your favorite of a market because, well, again, it's all about rotation, right? So now, amount below, the amount above. Okay, so that creates a nice big target now going overhead. In our trade room, we call these slingshot reversals. It's an overall bull market, but a bear range. Overall bullish, bear range, beautiful spot, well, horrible spot to be selling. Perfect spot for a bear trap. Trap the bears in, right? Add to your winner. Now, remember, if it breaks through that pendulum swing now, right? Breaks through that pendulum swing now, watch for one of these two follow-up trades. If it breaks up and grinds, which is very common after a range breakout, you know the game plan on that. You mark off the high, you pin off those lows, you look left, you don't miss that first test, right? And running, going higher. Think about where these prior highs are. Leave that runner for your target, right? Makes sense? That pop and grind move going higher. Or maybe we get a two-legged pullback, right? With basically a breakout pullback, right? Two-legged pullback. One leg, two leg, a bit more than a measured move. Hopefully you can see this now all coming together, right? Trap once, twice, squeeze those stops, leave that runner back up to retest the high. I know that ranges seem scary at first. I struggled with ranges a lot when I was a new trader, but I'll tell you, a range tomorrow would probably make our job even easier because now we know how to trade that rotation going higher. All right, guys, that's the game plan for tomorrow. Now, speaking of tomorrow, don't forget the place to be is in my trade room, 8 o'clock Eastern time. I can't think of any better way to learn to trade. Come out and do it with us. Learn along, trade along, 8 o'clock Eastern time at the opening bell. I'll put all the important links you'll need to learn more about this stuff. Start first with the free video classes. Everyone loves all the trade examples I include in that short video series, so enjoy those. Then come join us in my morning trade room, and we'll do it all together. In the meantime, be well out there, be nice to each other, be here next time. Adios, amigos. Bye for now.